Welcome to another episode of the Canis Major Incubator Commercial Multifamily Real Estate Investing video blog. The Canis Major Incubator is the premier platform for Texas commercial multifamily investing. Each week we make a short educational video about investing in Texas commercial multifamily real estate. So stay tuned at the end of this video to find out more about training, investing, funding for, and getting support for actively or passively investing in Texas commercial multifamily real estate. Hello and welcome everybody. Welcome to the Canis Major Deal Video Case Study blog. I'm Phil Grove and we have a very special case study to present this week, the Whaler Townhomes in Fort Worth. And our presenter this week will be Siva Pelchuru. And Siva, can you tell us about your deal?
Sure, Phil. Thank you very much. My name is Siva Pelchuru, and I'm presenting this case study today, which happened in 2013. Before we go the details, I did my PhD in chemistry, and I did postdoc at Texas A&M and Rice University, and ran the environmental consulting company for a few years, and then started investing in real estate since 2008. I joined Phil and Chenova since 2015 and became a sponsor of Canis Major Incubator in January 2017. And these are all my current portfolios that I held at one time or still holding. Texas Angleton Ranch, which is a 176 unit property. Autumn Chase is a 185 unit property. We have 15 single family homes that we acquired in Houston, Texas. There is another apartment complex called Palms at Baytown, acquired in 2017. And there is 36 single family portfolio in Mesquite, Texas. Henderson Apartments, La Plaza, go on like that. This particular property, Whaler Townhomes, we actually acquired in 2013, and this is actually located at I-30 and 820 intersection towards east side of I-30, and it's called Meadowbrook Subdivision. And this presents a unique opportunity. As you see from this picture, these townhomes coming with attached garage. These townhomes coming with two air conditioned HVAC units per unit. So this is basically a 17 townhomes, and there are only 17 townhomes in this subdivision. So that means we control all the HOA. We are not subdividing with anyone else. So these are also individually deeded. So if we would have been sold individually, there is an opportunity to sell individually too. So these were built in 1984 with slab foundation. All these apartments are stereotype, 2-bedroom, 2.5 bath, 1,200 square feet, and they all have attached garage, and some of them comes with additional parking, additional garages also. And each, as I mentioned earlier, each unit comes with 2 HVAC units, one for upstairs and one for downstairs, which is very useful because if there is a HVAC was down, it is not an emergency in this apartment complex because they have 2 HVAC units. So we can replace at our convenience. So anyhow, going back here, at that time they were being rented at $575, and this complex needed everything. The picture that you are seeing, anyhow, this is after the rehab was done. So the owner was in a desperate condition to sell this complex for 2 reasons. He has a lot of issues with the tenants and with the property. So he was an outside owner, so he couldn't able to run it properly. And his management costs and maintenance costs were a lot higher. So he actually basically abandoned the property. And the owner also wants to own another apartment complex in Irving, so he really wants to sell this and then try to find a bigger one. So we jumped onto the deal immediately. Then immediately after we took a takeover, we actually start rehabbing the exterior. While we are doing the exterior rehab, we did not disturb any of the tenants inside, so the tenants actually stayed back because we really needed that cash flow coming in. So we took one project at a time. We first finished the foundation of the thing. As you have seen in the picture, the front of the building is actually sloped right here towards the ground. See, the road is actually a lot lower than the building is. So here what happened is the soil actually got eroded. So we had to put the foundation piers from this edge to all the way to the other edge, which took a lot of piers. But the good thing is we don't have to put any more internal piers or interior piers. We did, enormous amount of foundation work. And we also did at the same time, we not only fixed the foundation, but also we fixed the soil grading, as well as we also did the retaining wall so that the soil should not get eroded further. So we stopped that. We also did replace the pitched roof as well as the flat roofs. So the flat roofs are on the top of the garage. If we can see it easily on this picture. These are all flat roofs and these are all pitched roofs. So we could able to replace both of them brand new. And we also replaced all 34 HVAC units with brand new HVAC units. So that's an added advantage because you don't have a lot of deferred maintenance anymore. Going forward, your maintenance and repair cost is lower. We also installed a new signage, and so it brings the glory back to the property. And it is well lighted because we repaired the exterior lighting. And so we, at the same time, while we are winding down the exterior rehab work, we started the interior of one of the units because when we bought this property, it was only 65% occupied. So we have several vacant units. So we took one of the vacant units and we started rehabbing that. And what we did in the interior wise is we installed new ceramic floor tile in the living room because down it has 2 stories, right? So both bedrooms were upstairs with attached bathrooms. So 2 bedroom and 2 bath were upstairs. Downstairs we have the kitchen, we have washing and dryer area, we have the dining area, and we have the living room, and we have a powder room, and we also have hot water heater place, and we have a fireplace. We also have a closet coat hanger place. So what we did is we replaced, we removed the floor, and we installed ceramic tile flooring throughout the living in the downstairs. That starts from the kitchen to the living room to the dining room. So all over the first floor is actually ceramic tile now. We also changed the paint. We got a 2-tone paint to the thing, and then we actually installed all brushed nickel fixtures. And we also installed the washer and dryers, brand new washer and dryers. We also changed the new stove and refrigerator. And when we go upstairs, we change the flooring with new carpet, and we continued the brushed nickel fixtures. When we walk into the bathrooms, we actually tile the bathrooms so for a better look. And we also changed the vanity, and we installed the low flow toilets. So which actually gave the property internally a very great look, because we also did the countertop resurfacing as well as the bathtub resurfacing. So with all this we did, I think we spent like close to 10 to 12 grand plus or minus, and we could able to get, we thought that we could able to get $200 higher. So we actually tested the market at $775 because where this apartment complex was located, we don't have the nearby another apartment complex of this size to compare with. These are the 17 townhomes positioned between a single family home neighborhood and an apartment complex. So when they walk in, the new tenant actually is going to feel like he's walking into his own house because we actually brought back the glory. but the apartment complex, so we couldn't be able to actually um, give the rent comp properly. So we thought that first we'll start at 775, and we started advertising, and we showed the apartment, and we rented on the same day. So that tells that we priced the property rent as too low. So we realized that what we did, and then the next unit came back in 2 weeks from that point. So we actually increased the rent to $825 per month. And we rented this out in a week. So we felt very good about it. And now we know that this is our rent to go with. So after that, we never renewed the lease for all the tenants because they're not qualified tenants. So we were actually upgrading every unit that is coming available. And we were renting at $825 per month. So then by the time we actually finished the last one in July 2015, some of the first rented apartments came for renewal, and some of them actually left. So we actually increased the rent to $850. So we could able to finish all this work in less than a year and a half. And we sold this property at the end of July 2015, and we sold it for $1 million. And so these are the analysis here. So we purchased this property in 2013 July for about $350,000. And then our total renovation cost, including the exterior and interior, close to $200,000. At the time of the sale, all units are renting at $850 market rent. And the monthly gross income was $14,500 at that rate. And the operational expenses were $7,500. And the reason why the operational expenses were low is because we put in everything brand new. And so the NOI is $84,000. So the sold price was $1 million at a 8 cap. In those days, it was pretty good. And the appraisal value, it came up as $1.1 million because the new lender looked at, shared the appraisal with the buyer, and the buyer shared with appraisal with us. So that's why we came to know that it's 1.1. It's not a common practice, but in this case, it happened because they asked me to reduce the price from less than $1 million. So I challenged them, and they were forced to show me the appraisal because I was pretty strong and I was not about to reduce any price. So when they showed me 1.1, I was just laughing at them. But hey, you got a good deal. Why are you still asking me? So anyhow, finally the sale went through. We sold it at $1 million as we planned for. And I also came to know in the mid of 2017, another investor was trying to buy this property for $1.3 million. So it is showing that it has not only the potential, but also the plan that we started was actually in a good path. So, basically that's it for today. So, Phil, do you have any questions, or did I explain it right?
Let me take my phone off mute here. Yeah, I mean, that was a great story, so thank you. And kind of the lesson there at the end was that, as these properties continue to appreciate and the cap rates adjust and the rents that go up, there's ongoing opportunity for profit for the next person and the next person as well. Siva, can you share any of the other lessons learned from this case study?
Yes, Phil, thank you for asking that question. The very main lesson that we learned is because this property was distressed and ran by the previous owner, almost ran down. And at that time, they were giving at $575, and sometimes he even used to give at $525. And when we were doing all this rehab work, we were wondering what would be the right price to put it under. So it was a little bit challenge for us to come up with, what the actual rental rate that is. So we, in the neighborhood where this property is located is around $200,000 above houses. So they are actually not a great comps. If it is relatively surrounded by where it is a rentable houses, then you can get the rent comps. So this is totally different place. But we felt that 775, 850 was somewhere the range, but we don't know where it is. So we tested at 775 first, and when it went out very quickly, so we realized we sold it for less. But the reason for us to go lower than higher, because when I bought it, this property was 65% occupancy. So my also inner motive is to occupy the unit rather than keep it empty even for 2 weeks. Because at that time, I needed a tenant, good paying tenant, rather than that $50 higher at that minute. So that's why we tested it lower, and then we got the tenants after that at a higher rate. That's one big lesson that we learned from here. Yes. And of course, these are the ones that we already learned before, but we implemented on this very well. So we were able to get all the rehab done on time and within the budget, which is very important for any project. And we know also to carry out the due diligence. We did the full due diligence up front, and therefore we didn't have any surprises on this property whatsoever, even though we did a huge rehab. And So we also learned to never make assumptions while we are doing the due diligence or while we are walking to a new property, but always verify everything. And if, just don't assume any unknowns, but always ask those questions. That's what we learned. So I think that's what it created as a great opportunity. Yeah.
Yeah, and Siva, I remember you having in the past told me about some of your prior deals. By the time you did this deal, you were quite experienced, and you were able to take that experience and apply it towards this project. That's why, like you said, you didn't really have any surprises. You knew what you were getting. You knew how to execute. You knew how to, make the improvements, raise the rents, and the project worked out at least as well, if not a little better than you anticipated. Going back, you spent $375 and $200, and then you ended up selling it for $1 million, and even making a little cash flow along the way. So I would say that was a nice project, and thank you so much for sharing this project with us this week. Each week here at the Canis Major Video Blog, we talk about a case study, a lesson learned, or just a lesson in investing in commercial multifamily real estate investing. So we'll see you next week on next week's video blog. So thank you again, Siva. Thank you for everybody that's listening.
Thank you, Phil.
Hey there, Phil Grove here again. I hope you enjoyed that video case study. If you're interested in investing passively or actively and want to get more involved with our network, just fill out the form on this page. There should be a button or link somewhere on this page. Just fill in your contact information and our team will reach out to tell you about our next training opportunity where we can meet in person. And you can see what our network is all about and how you can get involved yourself. Just to tell you a little bit more about the Canis Major Incubator, the Canis Major Incubator is the premier platform for Texas commercial multifamily investing. Investing in commercial family historically has been something that is kind of shrouded in mystery. It involves investing in multi-million-dollar projects, and when people want to put together multi-million-dollar deals, they have to pool money from multiple investors. And when you pool money from multiple investors, well, guess what? The Securities and Exchange Commission regulates such activities. So you can't just solicit people at random to invest in commercial real estate. Instead, you have to make sure that they are first sophisticated investors before they can even participate in these types of transactions. So it's some of the best known secrets and opportunities in the investing world, real estate or otherwise, is in commercial multifamily. But the reason you don't know about it is because you are probably not yet a sophisticated investor. In fact, you have probably not yet been trained and certified as sophisticated. So the Canis Major Incubator provides training for people that are interested in commercial multifamily investing to make them into sophisticated investors. The Canis Major Incubator also provides deals to investment. We have a network of over 1,000 investors, deal sponsors, and what we call acquisition specialists across the state of Texas that are sourcing and negotiating and putting together commercial multifamily investment opportunities for members of the incubator. The incubator also provides funding for commercial multifamily real estate. The incubator is a private funding platform of over 1,000 Texas high net worth sophisticated investors for funding Texas commercial multifamily deals from Texas-based deal sponsors. And then finally, the incubator provides support, a network of Texas-based coaches, deal sponsors, and deal co-sponsors for training and supporting people wishing to become active and or passive investors of commercial multifamily deals here in Texas. So to get more involved in the Canis Major Incubator, to become a sophisticated investor, just fill out the form and click on the link somewhere on this page, and we'll reach out to contact you to get you more involved. Thank you.